It continues. Welcome back, everyone. More updates on all the wild news stories here on the Natural Resources Beat. What a fascinating layer of the global news narrative. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. As a matter of fact, I will be at the Vancouver Resource Investment Conference next week in Vancouver. For those that are interested, I will be moderating a panel and I will be giving a speech, and I'm trying to make it as much of a showstopper as I can. So let that whet your appetite. And I have to say, what I'm discovering here doing my research, it is quite remarkable, the conclusions that I am coming to, which I will share more in depth next episode once the speech is delivered. So that is next week, January 20th and 21st in Vancouver. Also, the Northern Miner will be there, as well as at AME BC. I will also go to AME for a day before flying back out. So another interesting week here. We have an exclusive from Reuters on this Barrick situation. Barrick to suspend operations in Mali after gold seized. This came out yesterday. And of course, we've been following this news story very closely here, really since last April, when we first started hearing rumors of Wagner wanting to take over the Loulo-Gounkoto complex, and which really cascaded into a series of stories that really dripped out over the following months. Now, as it says in the summary here, Mali seizes $245 million in gold from Barrick's Loulo-Gounkoto complex, according to sources. Court order says Barrick-run mines owe $5.5 billion to Mali's economy ministry. Now, last I heard, it was $500 million, and then they put out the arrest warrant for Mark Bristow. That was in December, and they arrested 4 employees. They also put out a warrant for the arrest of the operator of the mine, and of course, this came after Resolute Mining was detained, quote unquote, but sounds like they were put in jail for almost a couple of weeks, like a day or two short of a couple of weeks, before they had to give $160 million. So let's continue with the Reuters story. Barrick disputes financial demands by Mali government. Suspension could cut Barrick's earnings by 11% in 2025, Jefferies analysts estimate. And so let's go into the story here. Canadian miner Barrick Gold said it will suspend mining operations in Mali after the government seized gold stocks, so in other words, gold inventory from the company's Loulo-Gounkoto complex, and flew out by helicopter over the weekend. Around 3 metric tons had been taken from the mining complex in western Mali on Saturday, 2 sources told Reuters on Monday, with one putting the value of the gold at $245 million. Now, one wonders why they would keep so much gold in the complex. It seems like an extraordinary amount of gold to keep on hand in the complex. In a letter to the Malian government on Monday, Barrick said the seizure meant it would now be obliged to temporarily suspend mining operations at the Loulo and Gounkoto mines. So it's kind of like Barrick's playing good cop, bad cop, kind of going back and forth from being nice to being tough, and now kind of being nice again, now that $245 million of gold has been taken. Let's continue. The seized gold will be transported to the state-owned Banque Malienne de Solidarité, BMS, in the capital Bamako, 2 sources said. Barrick shares on the Toronto Stock Exchange were down 1.9% shortly before the close of trading on Monday. Maybe the news has been priced in if it's only down 1.9%. One source said eyewitnesses at the mining complex had described gold being shipped in 2 separate Air Force helicopter loads. The second source said the seizure was part of a confiscation order that a judge issued last week. Sounds like a movie, doesn't it? In its letter to the Malian government, Barrick said the seizure of the gold meant it was no longer covered by Barrick's insurance. It added that it was waiting for confirmation that the gold removed from its site had arrived at the Banque Malienne de Solidarité for proof that the gold held there was insured. So one wonders what that means when Barrick says that the gold that was seized and taken out of the Loulo-Gounkoto complex is no longer covered by Barrick's insurance. Is that them basically starting a claim process with the insurer? Or are they saying something else? It's not exactly clear to me what they are getting at here with the insurance side of things. I guess they're saying if it disappears, it's not covered by insurance. And maybe what that means is, should this go to court, we will be adding that to our claim in this, international arbitration that we have started. Perhaps. It continues, in a separate court order dated January 2nd and also seen by Reuters on Monday, Judge Boubacar Moussa Diarra had ordered the seizure of the stock and said Mali's economy ministry claimed the two mines operated by Barrick in the country owed a total of $5.5 billion to the government, a much higher figure than previously estimated. Barrick has been in a dispute with Mali's government since 2023 over a contract based on new mining rules. The row has escalated several times, with Mali detaining senior executives and issuing an arrest warrant for Barrick CEO Mark Bristow. On Friday, the International Center for Settlement of Investment Disputes registered Barrick's request for arbitration proceedings against Mali, according to public documents. Neither Barrick nor the Malian authorities immediately responded to requests for comment. The sources spoke on condition of anonymity, as they were not authorized to discuss publicly the confidential orders. Barrick said in a note to Malian staff on Sunday that the government had begun enforcing an order to seize the gold and warned again that it may have to suspend operations at the complex over the long-running dispute. And finally, as it says here, Mali had previously demanded about $500 million in unpaid taxes from Barrick, sources told Reuters. Barrick denies any wrongdoing, so now they've 11x that to $5.5 billion. Incredibly. So, Reuters exclusive there on the Barrick Gold situation. So there is no press release, interestingly, on Barrick's website. Maybe that's in the works. Again, this is a bit of a breaking story here. Also on this tip, we got this big write-up in the Financial Times, the terrifying crackdown on mining companies in Africa's Coup Belt. This is by Anu Adoye in Lagos and Camilla Hodgson in London. So let's see what the FT is saying on this kind of new climate in West Africa, as they're calling it, the Coup Belt. International mining companies are at the mercy of, quote, terrifying, end quote, tactics from military regimes in Africa's Sahel, whose leaders are using legal disputes, nationalizations, and arrests to assert greater control over crucial minerals like gold and uranium. Never really heard gold being described as crucial. The last I heard from the FT, it was a barbarous relic, wasn't it? Okay. Let's continue. Mali, in recent months, issued an arrest warrant for Barrick Gold Chief Executive Mark Bristow and detained Australian gold miner Resolute's Chief Executive Terence Holohan for nearly 2 weeks. Authorities on Saturday even started seizing gold from Barrick, according to a company letter seen by the Financial Times. So interesting. So both Reuters and the Financial Times have their moles, they have their sources, so to speak, at the mine. Niger has also stripped mining rights to one of the world's largest uranium reserves from French state-owned nuclear producer Orano, while Australian-based gold miner Cerama Resources has launched arbitration proceedings against Burkina Faso after the junta withdrew its exploration license for a project. The three countries are part of what is known as Africa's Coup Belt, after being taken over by military juntas between 2020 and 2023. Their more interventionist stance, according to people familiar with the regime's thinking, stems from a desire to assert national sovereignty after decades under the thumb of Western miners and subject to contracts the new rulers view as tilted in favor of the companies. Yes, indeed. That is the perception, isn't it? So they probably don't feel too bad about it. And that seems to be the tone that we're seeing, say, from Mali's government here. Not really in the mood to negotiate. And if you don't like $500 million, well, how do you like $5.5 billion that you owe us? It continues. They have been rewriting mining laws, demanding higher tax payments and larger ownership stakes in the industry, but have also resorted to restricting operations, issuing arrest warrants, and detaining employees. And again, detaining, from what I understand, is being put in jail, my inference from Barrick's press releases. Quote, "It's terrifying dealing with the regime in Mali," end quote, said one person involved in the negotiations who asked for anonymity. Quote, "They're building arbitrary cases against companies to force them to negotiate and threatening arrests," end quote. Niger's government had said it is returning Orano's mines, quote, "to the public domain of the state," end quote. Ibrahim Traore, Burkina Faso's junta leader said in October that, quote, "We know how to mine our gold, and I don't understand why we're going to let multinationals come and mine it," end quote. The pressure tactics have turned into one of the biggest headaches facing the global mining industry at a time when companies around the world are trying to secure long-term uranium supplies and boost production of gold, whose price has risen to record highs. So really, it's a summary of what we've been discussing here for really all of last year, isn't it? So interesting, though, the prominence of an article on this in the Financial Times. Again, heard it here first. Continuing on, more UK mines needed to secure critical minerals, warns Watchdog. And again, this is the Financial Times. The UK will have to consider subsidies for new mines and more stockpiling to avoid supply bottlenecks for critical materials, the head of the UK's mineral supply watchdog has warned. And of course, this is something I've probably repeated to a fault here, this need to stockpile, a market solution for oversupply. And you know what's interesting about this? We saw that CMOC, a major Chinese company mining cobalt in the DRC, had a banner year. They produced a huge amount, but right now the cobalt market is oversupplied. And guess who's stockpiling cobalt? It's China, right? So at what point are we going to start putting two and two together here? I mean, I think we can even go to the DRC and say, listen, you're kind of getting taken advantage of because they're flooding the market and selling it to themselves. One could argue. Now, I'm sure it's more complicated than that when you put it all together, but this is the thing. The DRC is one of the biggest producers of cobalt in the world. But China, famously, controls the market. So what's the deal? The deal is if you control the metallurgy, if you control the refinement of cobalt, you control the market. Because what the automobile company needs is not cobalt that's taken out of the ground. They need purified cobalt. They need refined cobalt. And China controls that market. And it's not even close. And we can go through numbers maybe next week when we have more time. But this is kind of a crucial thing to understand that I think sometimes governments are not necessarily aware of. They just go, oh, we need more metal. Let's build a mine. It's actually more important that you have the smelter, the refiner, the metals processing. That is where you control the market. So until the West starts building more refineries and smelters and anything else that's required to really get the finished product of these metals, it's frankly semantics. As we discussed with a prominent graphite CEO only a few months ago, they may be mining their graphite in North America, but they're still sending it over to China. And why? Because China owns the processing. So with all that in mind, I just wanted to touch this article here. The UK will have to consider subsidies for new mines and more stockpiling to avoid supply bottlenecks for critical materials, the head of the UK Minerals Supply Watchdog has warned. Gavin Mudd, director of the UK Critical Minerals Intelligence Centre, or CMIC, said one option would be legislation similar to the US Inflation Reduction Act, which offers subsidies for the domestic production of some minerals. He also said the government could build up stockpiles of critical materials, an approach used by the U.S. Department of Defense. Although I don't hear them doing a ton of stockpiling from what I've seen. Frankly, the only stories I saw was that they felt like they didn't need to. I'm basing this on news stories that I've seen, not on necessarily the reality. But the news stories I've seen is we heard from a guy about 6 months ago who said they don't need to worry about stockpiling. It's not an issue yet. With cobalt, there's a lot available. And there's China stockpiling. So let's continue. Quote, that's what has to be looked at, what works best for the UK context, end quote, Mudd said. There is growing concern about the vulnerability of the UK and other industrialized nations to shocks in the mineral supply chain as decarbonization increases demand for a range of materials that were previously little used. Quote, we're living in a globalized world, end quote, Mudd said. That's what we have to grapple with, end quote. One could argue it's actually the opposite that is the problem. You're not living in a globalized world anymore, and that's what you have to grapple with, that you may not be able to get your graphite, for example, from China. That is the problem, but I think Gavin Mudd is basically trying to say that. Mudd said the government would have to look at alternative ways to obtain materials that come from a narrow range of sources, possibly through expanding UK mineral production, such as the lithium mine under development in Cornwall. My question is, do you plan on processing it in the UK? Because if you just are going to send it to China, it's kind of an exercise in futility, I would argue. And I'm not sure this distinction is being understood by policymakers. So stockpiling, again, on the menu here, and just a couple of more headlines. We have the fallout from the Nippon Steel, U.S. Steel saga, and CNBC was reporting that Cleveland-Cliffs is teaming up with Nucor in potential U.S. steel bid, according to sources. And as it says here on CNBC, Cleveland-Cliffs is partnering with rival Nucor in a potential bid for U.S. Steel, whose takeover by Japan's Nippon Steel was blocked by the White House earlier this month, sources tell CNBC's David Faber. Cleveland-Cliffs would purchase all of U.S. Steel for all cash and then sell off the Big River Steel subsidiary to Nucor. The sources said U.S. Steel's headquarters would remain in Pittsburgh under the deal. The offer would be in the high $30 a share. Nippon had planned to buy U.S. Steel for $55 per share, in a deal valued at more than $14 billion. U.S. Steel shares jumped more than 8% on Monday to $37.15 a share. CNBC has reached out to the companies for comment. The White House over the weekend extended the deadline for Nippon to permanently end its pursuit of U.S. Steel until June, as the companies pursue a lawsuit in federal court against President Joe Biden's decision to block the deal. U.S. Steel and Nippon have also filed a separate lawsuit against Cleveland-Cliffs, its CEO Lourenco Goncalves, and the United Steelworkers president David McCall, alleging they colluded to block the deal. Cleveland-Cliffs and Nucor shares rose about 3% apiece on Monday. Goncalves has dismissed the lawsuit as a, quote, shameless effort to scapegoat others for U.S. Steel's and Nippon Steel's self-inflicted disaster, end quote. So quite the mess in the fallout of the attempted U.S. Steel takeover by Nippon Steel. Another headline here from Reuters via mining.com. Despite Nippon Steel, U.S. and Japan say ties stronger than ever. And it says here the foreign ministers of Japan and the United States said their countries' ties were stronger than ever on Tuesday, even after Japan's prime minister called U.S. President Joe Biden's decision to block Nippon Steel's $15 billion bid for U.S. Steel, quote, perplexing, end quote. On Monday, Japanese Prime Minister Shigeru Ishiba expressed confusion over Biden's decision. But after meeting in Tokyo on Tuesday, U.S. Secretary of State Anthony Blinken and Japan's Foreign Minister Takeshi Iwaya hailed bilateral ties as stronger than ever. In remarks to the media, at which no questions were taken, Blinken did not mention Nippon Steel, but a statement from Japan's foreign ministry said he and Iwaya, quote, exchanged views on the economy, including on the acquisition of United States Steel Corporation by Nippon Steel Corporation, end quote. It said they, quote, reaffirmed the importance of Japan-U.S. economic relations, including investments by Japanese companies in the U.S., end quote. Well, I wouldn't get too confident if I were the U.S. that everything in Japan is hunky-dory. And one more huge story that has been bubbling under the surface here for months, this Korea Zinc story. They are the biggest smelter of zinc in the world. They also may be able to supply antimony to the U.S., and they are undergoing currently a takeover battle from within that involves, Bain Capital, of all organizations. So let's take a look here very quickly. Korea Zinc in talks with U.S. buyers to supply antimony, chairman says. This is Reuters on January 9th. Korean Zinc chairman Yoon-bi Choi said on Thursday that it is in preliminary talks with some U.S. entities to supply antimony after China's export ban to the U.S. disrupted the market for the mineral used in semiconductors. Choi told reporters at a briefing that the company was interested in long-term contracts and was talking with U.S. traders and others without naming any of the entities. Scrolling down a bit, Korea Zinc is the world's largest zinc smelter, but also produces about 3,500 tons of antimony ingots annually, some of which is shipped to Japan and the Netherlands. Korea Zinc produces zinc, lead, copper, nickel, and other metals with its own technology in South Korea, and with supply chains that, quote, do not involve China in any critical way, end quote, Choi said. So currently this takeover is actually quite a huge deal, because Korea Zinc, one could argue, is an incredibly important strategic asset. We could call it geostrategic, geopolitical, put whatever spin you want to put on this. This is a very important asset. And the concern is, I was reading several articles on Korea Zinc. It's quite interesting what's going on there. And I will begin to focus on that situation because the fear is when you get these like private capital firms like Bain and MBK involved, that they're going to hollow out the company. And from a strategic point of view, the West simply cannot afford to lose this asset to some private equity firm that is just out to make a few bucks here. And the private equity firm, I think, should, even from a patriotic point of view, should not be necessarily like, if they think they're just going to do everything profit above values, I think they're going to be in for a rude awakening. I don't think they're going to be able to take this over and hollow it out. It kind of makes you wonder if they understand the bigger picture here. I don't know what they think they're doing, frankly, this MBK Capital, if that is the plan. So another just like very interesting story here as these smelters and refiners and processing plants come to take on incredibly important strategic value. Again, it's the DRC, which is the biggest producer of cobalt in the world, but China dominates the cobalt market because they dominate the refining of cobalt. So that is where the bottleneck is. In a sense, we can build all the mines in the world as long as we're sending everything over to China to get processed, which is largely the case right now. As far as I'm concerned, it's a moot point if we're going to build any mines, if again, we're just going to send it over to China to be processed. So the West simply cannot afford to lose the world's biggest zinc smelter that is also producing antimony to private equity. I would argue, if I had to speculate here, I think we're going to get some government intervention. If we get close to that occurring, I don't think it's going to go through. Would be my little prediction of the day here. So a wonderful show ahead of us. We have an AME Roundup preview courtesy of President and CEO of the Association for Mineral Exploration, Keerit Jutla. He comes and joins us again to talk about the conference and everything that he's seen in his first year as CEO of AME and everything that is on his mind. So it's quite an interesting discussion. We also have PurePoint Uranium President and CEO Chris Frostad, who discusses the company's uranium projects and their many joint ventures with Cameco, Orano, and IsoEnergy. A wonderful show ahead of us, as well as many news stories, metal prices, and more. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner, and on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Chris Frostad, President and CEO of PurePoint Uranium, for this week's Spotlight. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast for this week's Spotlight, Chris Frostad, President and CEO of PurePoint Uranium. Chris, welcome to the show.
Good to be here.
Well, it's great to have you back, Chris. I mean, you're in such an interesting domain in the uranium industry. For those that are unfamiliar with PurePoint Uranium, could you give us just briefly a little bit of background on the company and what you guys are up to?
Absolutely. We're a uranium exploration company. We operate exclusively in northern Saskatchewan in an area everyone knows well as the Athabasca Basin. We've been working up there for quite some time now, 15, 20 years, to be honest. And I think what has given us a lot of longevity is the partners that we have up there. We work with Cameco, we work with Orano, we work with IsoEnergy, we work with Foran Mining. And it's been interesting because those relationships really have allowed us to ride the ups and downs of the market and what's been going on over that period of time. And right now, as the market continues to be very nuclear focused and very, very interested in uranium and where it's heading, we're going to have probably one of the busiest years we've had in a long time.
Okay, excellent. So those are pretty impressive joint ventures that you have there. The last time you were on, you mentioned a joint venture. So give us a little update on, say, what's happened in the last year. Like, are you drilling? What are you guys up to?
Sure. Well, absolutely, we're drilling. But I think what we've seen more importantly over the last year or so is that the equities, and in particular the exploration equities, really haven't been reacting to the upward trend in uranium prices the way we would have expected them to. I know last time around in the mid-2000s when uranium prices went crazy, so did the equities. And this time around, we're just not seeing that same sort of reaction. And I think that that's probably common amongst a number of commodities right now. But in our case, it caused quite a problem because the money's been not difficult to get. We're able to find and finance exploration in uranium, but because we're not getting the buoyancy in our share price, we're seeing a lot of dilution. So we've kind of extended something we've had in play for a while, which is the notion of a joint venture, and not just an earn-in, but looking at projects of note and determining how we can better finance them moving forward, more than just dipping into our own bank account on an ongoing basis. So in the last year, we announced probably our biggest joint ventures with ISO Energy. ISO Energy is a developer in the space. They currently sit on the largest grade uranium deposit on the planet. And we started looking at a lot of our properties and their proximity to each other. And so what happened near the end of the year is we created a 50-50 joint venture with them. We put in some of our best projects. They put in a lot of their good projects. We're right adjacent to that deposit I mentioned, and we're now moving forward on a 50-50 basis, and we're the exploration team on it. So that means that not only have we got a lot more property and a lot more elbow room to do our exploration in, but we now have a partner who's contributing financially to the advancement of these projects. And quite frankly, we earn a bit of a management fee by running that project. And if and when we identify a resource, they're the development team that will pick up the torch and move it forward from there. And what that did is it kind of rounds out our whole portfolio in that we have two other projects, Smart Lake and Hook Lake, which are joint ventures with Cameco and Orano. And again, they financially support those projects. And in the same way, we're the operator. We've got big balance sheets picking up the bulk of the financial burden. And that's a good thing for everybody. In a world where we know that it takes tens of millions of dollars to even begin to identify a uranium deposit up in that area, we can now do it in conjunction with these partners, which is fabulous. It gives us, the time and the energy and the money to continuously explore and improve the odds of bringing home that next discovery. And moreover, what it does is it validates these projects. If I've got a small portfolio of projects in the basin or wherever, that is my world. And, no matter what I'm finding, I'm going to present it as being positive. I have to. In this case, I've got partners who are validating those projects because they would not be financially supporting projects unless they knew that they had the potential to deliver tier one type discoveries. So I think it also provides comfort to investors that our money is going in the ground alongside those people that are comfortable that we're doing the right thing with it.
Well, indeed. I mean, you have some of the biggest names in the uranium industry with Orano and Cameco. So a wonderful, I suppose, social proof, we might say, from an investor's point of view. Now, what do you think is there? In a sense, how excited are you about these projects? Again, if ISO Energy, Orano, and Cameco are interested, what do you think you might have at some of these projects?
A few things. I can run through them quickly. If we look at Hook Lake, for instance, that's our joint venture with Cameco and Orano. During last year's drill program, we started to come into a brand new area of mineralization and indicators that would demonstrate that we may be on the edge of something. So that's a priority to us and our partners to keep moving into that area. Also, I should mention at the outset, this project sits adjacent to and is on trend with NextGen's Arrow deposit, with Fission's Triple R deposit. There's well over 350 million pounds of uranium sitting there, and we're right next door and right on the same crack in the earth, if you will. The other thing at Hook that's got us excited is NextGen has managed to identify what appears to be and is developing out another deposit to the east of their Arrow deposit. And again, it just sits on the other side of our claim line and trends right up into our property. So that's another priority that we're working on with our partners that truly needs to get some drill holes into. Our Smart Lake project, which is our joint venture with Cameco, it's just west of Hook Lake. It's a project that we drilled back in 2012. And then all the excitement started up over at Hook and over at NextGen and Arrows and Fission's area. And so we kind of left it on the side for a while we spent all of our time at Hook. Well, we're going back there for our first drill program since then in a month or so. We've just finished up a geophysical survey up there to tighten up our drill targets up there, but we'll be drilling there in a month or so. And I'll mention we've only had one drill program up there, and we managed to find uranium, mineralization in the first hole. So that's another project that's got us all excited. When it comes to the new area that we have with ISO, it's about 98,000 hectares. It's a huge district scale project we put together up there. And it's adjacent to and runs right on trend with their hurricane deposit, which is close to 50 million pounds at an average, ridiculously average grade of 45%. So, there's a lot of excitement around where we're going to go next there, because that trend and that geological trend cuts right through all of these projects. And now that we've combined them and consolidated them, we're anxious to get out there and do the work there. We've got about a $5 million budget set up for next year there, and we plan to do a lot of drilling with it.
It all sounds quite promising and quite impressive. So how do you see this playing out, say, in the next couple of years? Like, it all sounds good, let's say, from an investment point of view, but is this going to take, 5 to 10 years? Like, how do you see this playing out in the next couple of years, at least in terms of maybe what you have planned? Like, what is the roadmap here?
It's exploration. I mean, let's face it, we're dealing in a higher risk sort of investment here. And I think everybody that invests in exploration companies understands that. I think in our case, what we see happening over the next year or two is we're dealing with well-advanced projects. That is, this isn't greenfield stuff. This isn't our first go around on these projects. All of these projects have already had literally tens of millions of dollars spent getting them to the stage they're at. And a lot of people don't necessarily appreciate the amount of effort and money that it takes just before you even put a drill hole in the ground in terms of prospecting and surveys and geophysical examinations and et cetera, because you just don't want to go out and start poking holes in the ground. So these are projects that are well advanced. They're all ready to take a drill. There has been some first pass drilling done on most of it. And so we're at that stage where every hole we drill is in anticipation of now making a discovery. And whether that happens at Smart Lake in March, or at our Fire Eye joint venture with ISO, or at our next Hook Lake drill program, again, who's to say? But what I can say is that we now have the non-dilutive financing behind us to continuously explore all of these and advance them until we make that discovery.
Okay, excellent. And just finally, what stock exchanges or ticker should people look for if they are interested in PurePoint Uranium?
We're on the Toronto Venture Exchange under the symbol PTU. We can also be found on the over-the-counter QB in the U.S. And we're oddly enough, we seem to do a lot of volume down there as well. So people are keeping an eye on us south of the border as well.
Excellent. Chris Frostad, President and CEO of PurePoint Uranium. Thank you for joining us on this week's Spotlight. And thank you to PurePoint Uranium for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, a story we have been following for months. Congo rebels muddy minerals market with illegal Rwanda exports, says UN report. This is Reuters via mining.com. Rebels in Eastern Democratic Republic of Congo fraudulently exported at least 150 metric tons of coltan to Rwanda last year, leading to the largest contamination of the Great Lakes region mineral supply chain on record, UN experts said in a report. The flows started after the M23 movement, a Tutsi-led organization purportedly backed by Rwanda, seized the Rubaya area, which produces minerals used in smartphones and computers following intense fighting in April. M23's control of transport routes from Rubaya to Rwanda led to Rubaya minerals mixing in with Rwandan production, the UN Security Council's group of experts said in the report published on Wednesday. Quote, this constitutes the most important contamination of supply chains with ineligible minerals recorded in the Great Lakes region over the last decade, end quote, the report said, referring to a vast area that includes northeast Congo, Rwanda, and other countries east of Congo. Rwanda and M23 did not immediately respond to a request for comment. The situation complicates procurement for technology manufacturers who are under scrutiny to ensure that metals used in their products are not sourced from conflict zones like eastern Congo. The report said the rebels established a so-called mining ministry in the occupied territory and ensured a monopoly for the export of coltan to Rwanda from Rubaya, which has one of the world's largest deposits of the strategic mineral. In this way, the militants collected at least $800,000 per month in taxes on coltan production and trade in Rubaya, it said. On the ground, the rebels doubled the wages of diggers to convince them to keep working in Rubaya and oversaw forced labor to widen roads to accommodate truck transport. They also patrolled the town and its mining sites to make sure minerals were only sold to authorized Congolese and Rwandan traders, it said. In December, Congo filed criminal complaints against Apple's subsidiaries in France and Belgium, accusing the tech firm of using conflict minerals in its supply chain. Apple disputes the allegations and said it has told its suppliers they must not use the minerals in question sourced from Congo or Rwanda. So the UN basically weighing in, kind of saying what everybody suspected, which is these minerals in eastern DRC are basically being laundered through Rwanda, who the EU, remember last February, signed an MOU, a Memorandum of Understanding, to supply critical minerals to the EU from Rwanda. And the DRC months later commented on how they were not really impressed with that situation there. So continuing on, UK to sign critical minerals partnership with Saudi Arabia. This is Reuters via mining.com. And to me, this just is another example of how if the West doesn't want to build the processing facility for metals, it's going to be subservient to all these other countries that are willing to build smelters, refiners, and, whatever else is needed for metallurgy and processing of these metals. So here is the story. This is Reuters via mining.com. Britain will sign a minerals cooperation partnership with Saudi Arabia that could help strengthen supply chains, create opportunities for British businesses, and attract investment in the UK, the British government said on Tuesday. Again, if I was the British government, if I was actually any Western government, I think right near the top of my agenda would be building metals, refineries, smelters, processing facilities, all of the above. Imagine if the UK had the metals processing of China. Imagine what a different UK economy it would be. Instead, here they are. Britain needs a secure long-term supply of critical minerals such as copper, lithium, and nickel, which are used to make smartphones and electric cars, but are also vital to build data centers that help develop artificial intelligence systems. On its part, Saudi Arabia, which estimates the value of its untapped mineral resources at $2.5 trillion, is aiming to become a major global hub for critical minerals trade. For Britain, the deal will form part of a broader industrial strategy that it says will be key to both national security and its objective to boost economic growth and create jobs. It's interesting. I did a search on metals refineries, and guess which country came up the most? Saudi Arabia. Could be just random, but kind of interesting. And just a headline here, India to sign mining pact with Mongolia soon, government source says. This is Reuters via mining.com. So India looking to make a mining deal with Mongolia. Interestingly, continuing on, Canada disputes Trump's claim of resource independence. This by Cecilia Jamasmy at mining.com. Canada's Minister of Energy and Natural Resources, Jonathan Wilkinson, has pushed back against incoming U.S. President Donald Trump's recent claim that America does not need anything from its northern neighbor as, quote, simply false. Wilkinson, who is speculated to be a contender to succeed Justin Trudeau as Prime Minister, highlighted Canada's critical role as a supplier of resources the U.S. lacks feasible alternatives for, including crude oil, uranium, potash, and critical minerals. Quote, the United States derives enormous economic value from Canada, end quote, Wilkinson said during a CTV News interview. He noted that U.S. refineries, particularly in the Midwest, rely on Canadian heavy crude oil. Alternatives like Venezuelan crude present logistical and geopolitical hurdles, while critical minerals and uranium from Canada fill gaps that would otherwise leave the U.S. dependent on China or Russia. Canada also supplies potash, a key ingredient for American agriculture, and hydropower to states like New York and Massachusetts. Quote, there is no alternative, end quote, Wilkinson emphasized, describing the deep interdependence of the two nations' economies. The minister emphasized the critical role of Canada's resources in supporting the U.S. energy and defense sectors. American nuclear plants rely heavily on Canadian uranium, and the U.S. Department of Defense has invested in Canadian projects to secure alternatives to Chinese supplies of critical minerals, including cobalt and graphite. Wilkinson also revealed that Canada is prepared to take strong retaliatory measures if the U.S. imposes tariffs, including an export tax on Canadian energy or targeted levies on American goods. So Canada is starting to get a little bit tougher in their response to Trump's tariff proposal. Continuing on, Ontario pitches Trump on mining deals with tariffs looming. This is Bloomberg News via mining.com. The leader of Canada's most populous province is pitching a, quote, renewed strategy alliance, end quote, with the U.S. on critical minerals, as President-elect Donald Trump threatens crippling tariffs on the northern nation. Ontario Premier Doug Ford unveiled Monday a new plank in a broader strategy he calls Fortress AMCAN. The plan aims to invest in and build out a critical minerals supply chain in North America. A very good idea, I would argue. It advocates for expanding capacity to process metals and minerals mined on the continent, while accelerating federal and provincial timelines to permit and approve mining projects. Quote, the success of Fortress AMCAN depends on the critical minerals needed for new technologies, including advanced military technologies that will define geopolitical and economic security for the next century, end quote, Ford said in a statement. You know, the only problem with this is the name. And I'd argue Trump is pretty big on names, and I don't think he's going to like this name, Fortress AMCAN. So let's see what happens. I mean, really, from a strategic point of view, it's actually very clear, I would argue, that this needs to happen and should have been happening really years ago. Until the West controls its own metals supply chain, it will always be fighting with one hand tied behind its back economically against China. It is that simple. He also said, quote, make no mistake about it, if they come full tilt at us, referring to the U.S., I won't hesitate to pull out every single tool we have until they can feel the pain. But that's the last thing I want to do, end quote, Ford said Monday. Canada produces more than 60 minerals and metals and has more than 200 mines and is home to almost half of the world's publicly listed mining and minerals exploration companies. However, the time it takes to permit and approve mines in Canada has become a deterrent for miners as timelines can extend as long as 25 years. China, meanwhile, controls the bulk of the world's processing plants and metals refineries, presenting a major obstacle for Western countries seeking to loosen the Asian superpower's grip on the mining business. And this is the key point. You can mine all the metals you want in the world, but if you still have to send them to China, you really haven't gotten any further ahead, because they can ultimately sell it to you for more and to themselves for less. The only way to level the playing field is to build processing plants and metals refineries in the West. That is the only way. Otherwise, I would argue you're at a structural disadvantage. And here is the final quote from Doug Ford. Quote, at a time when China is winning the race to dominate these resources, while also restricting the sale and shipment of critical minerals to the U.S., Canada and Ontario need to urgently get our critical minerals out of the ground, processed, and shipped to the factory floors that are building for the future, end quote, Ford said in his statement. Well, it seems to me like for all of the controversy around Doug Ford, he seems to understand what's going on from a metals and minerals processing perspective, which I would argue is the key issue. So very interesting over there. And just a few more headlines here. Greenland to set terms of defense and mining ties with the U.S., says Prime Minister. This is Reuters via mining.com. Greenland Prime Minister Mute Egede said on Monday the country is looking to strengthen its defense and mining ties with the United States, albeit on its own terms following renewed interest from U.S. President-elect Donald Trump. And here is a quote. Greenland's independence is Greenland's business, also in relation to the use of its land, so it is also Greenland that will decide what agreement we should come to. And another quote, this is the first time Greenland has been listened to in an intense way. We need to be calm and take advantage of things and stand together, end quote. So, pretty interesting, actually. Greenland, maybe not that sad that they are being discussed in the news for a change. A few more very important headlines. Canada Rare Earths signs deal to buy permitted refinery, co-developed mine project in Laos. So this is fascinating. The refinery has a rare earth oxide production capacity of 3,000 tons per year, was constructed 12 years ago, and has not operated since being built due to a historical Lao PDR policy change affecting rare earth processing. The company said the policies are now reversed, and the government is supporting the startup and operation of the refinery, encouraging in-country processing of locally produced rare earth concentrates to increase economic benefits from the numerous new ion absorption clay rare earth mines located in northern Laos. So you hear it from Doug Ford. You see Canada Rare Earth getting a refinery. These are the keys to the kingdom, so to speak. Another headline, USA Rare Earth produces first batch of magnets at Oklahoma plant. And this is by a staff writer at mining.com. And the plant is called Innovations Lab. It represents part of a USA Rare Earth's vertically integrated rare earth element magnet supply chain, leveraging what it hails as, quote, the only scalable sintered neomagnet manufacturing system in the Western Hemisphere, end quote. So moves are being made in the right direction here. Northern Graphite to restart mill, hike prices, so also working on a mill, and this is the Lactase Eel mill in Quebec. So there are signs of movement here. Those are your news stories. Now let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.77%. That is 0.13% higher than last week, and it actually hit 4.8% yesterday. So a bit of drama there in the bond market. The UK 10-year gilt is yielding 4.88%. That is 0.23% higher than last week. So UK, don't forget the pension crisis was 4.5%. Now we're at 4.88%. So big jump in yields for the UK 10-year gilt. Again, near 5%. The Italy 10-year bond is at 3.81%. That is 0.21% higher than last week. The German 10-year Bund is yielding 2.6%. That's 0.14% higher than last week. And the Japanese 10-year bond is yielding 1.24%, and that is 0.11% higher than last week. And only, 3 months ago, we were under 1%, and now we're at 1.24% on the Japanese 10-year bond. Turning to precious metals, gold is trading at $2,679.20 per ounce. That is $21 higher than last week. Silver is trading at $30.30 per ounce. That is 54 cents lower than last week. Platinum is trading at $958 even. That is $30 higher than last week. And palladium is trading at $930 even, and that is $34 higher than last week. So precious metals higher, except for silver. Turning to industrial metals, copper is trading at $4.29 per pound. That is 17 cents higher than last week. Iron ore is trading at $98.09 per metric ton. That is $1 lower than last week. Aluminum is trading at $1.17 per pound. That is 4 cents higher than last week. Lead is unchanged at 88 cents per pound. Nickel is back above $7 at $7.21 per pound. That is 31 cents higher than last week. Tin is trading at $13.54 per pound. That is 31 cents higher than last week. And cobalt is unchanged at $11.02 per pound. Lithium is slightly higher at $10.36 per kilogram. That is 3 cents higher than last week. Uranium is trading at $73.55 per pound. That is $1.45 lower than last week, and zinc is a penny lower at $1.30 per pound. Zooming out, a bit of a mixed bag here. There's news that copper might be trading on anticipation of Trump tariffs, but really when you look at everything here, precious metals get a bit of a bump on the week, except for silver, and really industrial metals edge sideways with copper and nickel getting a nice little bump. And those are your metal prices. Coming up, I'm very pleased to welcome back to the Northern Miner Podcast, Keerit Jutla, President and CEO of the Association for Mineral Exploration. He discusses the upcoming AME Roundup conference in Vancouver from January 20th to January 23rd. He also discusses his first year at the helm as CEO of AME, as well as the big issues facing British Columbia and the mining industry as a whole. I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner Podcast, Keerit Jutla, President and CEO of the Association for Mineral Exploration. Keerit, welcome back.
Thank you so much for having me. Looking forward to chatting with you today.
Well, as am I, looking forward to chatting with you, Keerit. I'm trying to think back. Was it the first time that we spoke a year ago when you had just recently started?
It was. Yeah, it
Yeah.
was about a year ago. Yeah.
I mean, amazing. In a weird way, I'd say only a year. It could have been like 2.5, and I would have been like, yeah, that's totally possible.
Things get so busy, doesn't it feel like it was both yesterday and 10 years ago at the same time?
Yes, indeed it does. And I feel like many of our listeners will relate to this conversation that we're having here. Time, we think we know what it is, but perhaps not. Okay, so tell us then. I mean, you had just begun. How has the first year in that role been at AME?
It's been amazing getting to know the members, the industry, the nuances of it, the passion and connection for it, but also the incredible opportunity here in Canada and BC for mineral exploration and mining has been phenomenal. Learned a lot, and also I'm really excited for where we can go.
Well, indeed, it's so topical what's going on. I mean, we see governments, it's kind of become like a frontline issue. Like I imagine, in a sense, the meetings that you might be having at AME with policymakers, I imagine you are having meetings with policymakers. I imagine they have a bit more of a urgent tone, shall we say, than they might have had, 10 years ago. Like, I mean, do you think that might be the case?
100%. Whether, related into mineral exploration or now the discussion around critical minerals is the importance of this industry, that many of us in the industry understand has now been appreciated and is resonating in the country and I think internationally as well. Today's minerals and metals discoveries and development, it's going to power the low carbon energy solutions we need for tomorrow. And that is now a key priority, right? And we've been doing really great work connecting with leaders provincially, federally, internationally to highlight British Columbia as a global mining exploration hub, and also Canada as well. And in order to do that, and in order to realize that key future that we want, BC can and must attract investment to develop its mineral resources, and really highlighting the amazing partnerships and work that's happening together between AME members and Indigenous communities to progress reconciliation. So it touches on so many areas in that in order to realize that key critical mineral future, we're going to need more greenfield exploration. We're going to need to support our current mines in the queue. We're going to need to do it sustainably and reconciliation centric. And those are all strengths. And it's been amazing, with policymakers now really looking to us as that point entity saying, all right, how do we do it? And it's something that we're really excited to continue, and something that's a key theme of our conference coming up, AME Roundup on 20th to 23rd, is securing our future is that theme. So I'm really excited to continue this work and to give you another progress report a year from now.
Indeed, and I hope to be here, Keerit.
Yeah.
Okay, so tell us about the conference then. Can you give us a preview of kind of what you have in store? Again, you said it was January 20th to 23rd. Pretty well-known conference in the industry, the Association for Mineral Exploration, AME Roundup, 2025 this time. So what do you have planned?
This year, the conference is from the 20th to 23rd, and the theme is securing our future. I'm really excited for this conference. We have seen attendance, sponsorship, like everything is going through the roof, and it's because of all of this interest and energy around the future of critical mineral development. And I think from the incredible speakers and keynotes that we have coming in, the different attendees, it's really evident in the priority of it. So this one is one you don't want to miss, folks. There's some really important things coming up. The beginning of the conference also coincides with the inauguration of the new president of the United States. So, there's going to be a lot of important things to be talking about at this conference. And we're looking forward for folks to come, connect, network, and to be at the cutting edge of where we're going.
Right. And so is there like a featured speakers thing, or are there kinds of speakers that are coming? Like, is it policymakers? Is it, I don't know, mining industry CEOs? Like, what kind of panels are you going to have, for instance, or speeches?
We have amazing keynote speakers that will be coming in to discuss on all areas involved in mineral exploration and mining. So we have in our finance lunch, we have a keynote speaker in Doug Silver, who's the CEO of Balfour Holdings. We have one of our main keynotes at our opening ceremonies will be Adam Lundin, who's the chair of the Lundin Mining Corporation. In our reconciliation breakfast, we have the amazing Chief Willie Sellers from Williams Lake First Nation, who has now had an incredible documentary series that has had international acclaim, but is also one of the forefront leaders in Indigenous mining and how you can work really closely together with industry and with First Nations. We also have, in our technical area as well, an amazing keynote speaker from Newmont who will be talking about the current issues from a technical and geological perspective as well. So there's fantastic keynotes who are cutting edge, top of the industry, who are going to be giving that not only key highlight on where we are, but on where we're going. And these are the leaders who are driving it. With respect to the rest of the conference, it is still that really, by geologists, for geologists to see where the mineral potential, new core samples, things like that from around the province, but also the international interest in this conference has been incredible. So, during this past year, I have seen from going to London, going to the United States, meeting with different consul generals, is that key interest and that key desire for investment is there. Those folks are going to be coming to the conference. So whether it's at our different networking sessions or whether it's at the exhibits, the exhibit hall there as well, I'm really excited for what conversations can be had, what deals can be done, and how we, continue to support our membership and any attendants who are going to be coming in.
It sounds like if minerals and government policy and even geology is your thing, that perhaps it is not a bad idea if you're nearby to attend. And finally, just on the conference here, how do people go? Is it AMEBC or roundup.amebc? How much are tickets? Can you just give us a little info for anybody that's curious?
Absolutely. So to register for the conference, you can go to roundup.amebc.ca or Google AME Roundup registration. It should take you to that page. You'll see where the on-site registration and check-ins are. You can register online there as well. There are day-to-day specific passes and there are full conference passes as well. I think many of the keynote lunches are already sold out. So you really want to get on board or look to register right away as soon as you can. And then with respect to pricing, we have the individual membership registration, a student membership, then there's passes for life members and non-members as well at reasonable prices for anyone who's interested in attending. So encourage you to go online and have a look at that. And then also contact us if you have any questions about registering for the event.
Okay, excellent, Keerit. Now, I do have some questions here about what's happening in BC. You talked to our Western editor, Henry Lazenby, in November. I was quite surprised at what was going on in BC in terms of permitting still being quite backed up in British Columbia. And so, do you have an update on that? Like, what is the situation in British Columbia in regard to permitting and mining?
I think with many new initiatives and new policy proposals coming forward, it can have, an impact on permit timing and permit efficiency. But one of the things that we've seen as a promising start is that Premier Eby has been listening and, he's been really receptive to the key issues here. And he's committed to firm permitting deadlines. The new government's off to a promising start with the creation of its own mines ministry, which is a really big deal in focusing solely on mineral exploration mining. And, we're looking forward to assisting this government in ensuring that their critical mineral strategy improves timelines, supports MinEx, and enables Indigenous participation. So that's where things sit right now. Is the last provincial election was extremely close, and that message, has really been heard loud and clear that in order to have a strong economy, you need mining and mineral exploration. It's the backbone of BC's economy. We can't fund the things we want to fund without it. And that's been heard by, the provincial government. And let's now see how things, move forward in the next steps, right? The 16 proposed critical minerals mines in BC represent $36 billion in near-term investment and 300,000 person years of employment, right? 11 billion in tax revenue. So this is really important. And now it has become evident throughout the province, and I think throughout the country, that, we need mining. And Canadian mining and BC mining is the most sustainable, the most reconciliation centric, and the most forward thinking, in the world. So let's support the industry.
As I talk to friends, I was at a music concert that a friend put on, or just, a smaller thing. And I was talking to my friend's friends and discussing mining. And it's exactly what I told them. I was like, if you're concerned about the environment, it's better maybe that places like British Columbia are doing the mining, because they're going to have pretty high standards. And that's not to say other places in the world don't have high standards, but some places don't, is the reality, right? So to your point, there's a lot of arguments to be made if you're environmentally conscious to have it in a place that is environmentally conscious, like British Columbia. So do you feel like progress is being made? I suppose at this point it's too early to say from that November article. Like, I guess the words are good. Do you think the message has been received that this needs to happen fast?
Yeah, that message definitely has been received, in my view. The new minister, Minister Brar, is fantastic. He is really focused on this as a key issue. And I think within, the first month of him becoming minister, the Osisko mine project was permitted, but there's still a long way to go. I think one of the key items that we've been working very closely on and advocating on behalf of our members is the staking system for as it relates to mineral exploration. So, court case last year said that you need to consult on staking, and, that's the rule of law and that's the case. So we said, okay, let's get to work. And over the last year, the government wanted to impose a much higher standard, which was a consent standard. But what we let them know is, hey, what the case outlines, that's what's, clear and predictable. So let's just commit to doing that and then moving forward. And we've been really pleased that government has now, heard that with a new minister coming in. And, we're looking to build that out, including a government-led consultation process that has a fixed timeline of, 90 to 120 days, right? This has to be instituted by the end of March. So it's things like this that are tangible that we have been advocating for, that says, look, in order to attract investment dollars, we need to have regulatory and permit certainty. There has to be reasonable timelines. There has to be investor centric and industry centric. And, the province is listening. We have a long way to go still, where there's a lot of hard work that we're going to do together to implement. But I'm happy where we are now and where we can go moving forward.
It really highlights, I would argue, the importance of the work that you're doing, in a sense, to help foster policymakers along here at AME, to help kind of, inform and, give a coherent industry policy and strategy to a certain degree, or at least vocalize what industry kind of is looking for.
I've been really proud of the work we've done in AME and our team in this last year to be that key advocacy, policy, collaborating, brokering entity, not only in BC, but in Canada. And geopolitically, it is so important for the industry to have a consistent entity that no matter which government comes and goes, that we continue to do this work that are rooted in the key priorities of this industry. We've seen that in how we've worked in with the BC NDP provincially, with the federal Liberal government, and with likely, the new incoming government as well, is we continue to drive the same message. We're doing proactive policy work. We're doing proactive work, attracting investment here. So I've been really, really impressed and really excited with this key work that we're doing, but we still got a lot more to do, right? And in terms of critical minerals, the time to act is now. If we don't unlock them, others will. The federal government is also going to need to expedite permitting for critical mineral exploration and mine construction. And, that's going to be a key priority in the election moving forward, right? And for policies that, are important to that is, we want to see a permanent mineral exploration tax credit, right? It should be made permanent. It shouldn't just be, renewed for just one more year. Harmful policies like Bill C-69, which was with respect to the Impact Assessment Act and changes to capital gains taxes on flow-through shares, they must be reversed. It's these type of policies and this type of, I think, disconnect that has been very detrimental to the industry that, with our advocacy, we've been, continuing to push back and to see that, there is a key alignment there. We don't want to see a national carbon tax on this item, right? It is key that in order to lead in this global critical minerals and energy supply chain, Canada's going to have to align its policies and permitting processes and messaging to what's actually going to work and what investors are looking for.
Indeed. And I would argue, it's not just an environmental prerogative, it's an economic imperative, so to speak. Like we see BYD putting out a, $7,900 car in China, and we can't do that over here, I would argue, because we don't own the metals supply chain, so to speak, or the processing and refining, right? And so I'm glad that you guys are doing what you're doing. Now, I guess just on that point, though, I do have a question. We talk a lot about mining. What about like processing and refining? Because for instance, China, they don't have a lot of cobalt in China, but they're picking a number out of a hat, something like 90% of cobalt refining. And they dominate cobalt, even though the cobalt's not in China. Do you hear anything like about the actual refining and the processing of metals?
There is a key imperative for BC, Canada to have a strong, stable, critical mineral supply chain in our processing, in our smelting, in our transportation, because we need to have that strong Canada-led, Canada-first geopolitical supply chain imperative, because if we don't, others will, and we will be beholden to them. Exactly like you said, is we have one of the best, if not the best, regulatory systems that look at key environmental items. We're building this towards a low carbon future. We're doing it in a partnership with Indigenous peoples as well. But if we're not able to do it and lead in it, we're beholden to others who are doing it faster, and we are at risk of policies changing that. For example, as it stands, Canada's unprepared to address, challenges posed by the Donald Trump's presidency. Whether that's shutting down government to tackle the threat of tariffs is not the correct way to answer it. The U.S. and Canada are good neighbors and good trading partners, and to maintain, this legacy of friendship, we have to recognize that we can bring to the table abundant natural resources and expertise in responsible development. Given the state of the federal government, we applaud Premier Eby and his fellow premiers for leading on this, right? The Premier highlighted BC's unique role, and just to your point, noting the example that Teck Smelter and Trail supplies critical minerals essential for technologies in the States that you can't source from China, right? And it's more focus on these items that we're going to need to do. The asset isn't going anywhere, and there are many more out there needing to feed the supply chain. So it is absolutely essential that we put more focus, not on the tangential, is critical minerals the hot topic now? Well, let's invest in an EV battery plant, problem solved. No, we have to actually have a clear and succinct focus and dedication on this. We need to readdress harmful policies like Bill C-69. We need to reverse the capital gains tax on flow-through shares. We need to get rid of that national carbon tax on the year. We need to institute a permanent mineral exploration tax credit. And those are items that we are excited to see some parties, advocating for, and, see how this is going to resonate in the next election. So to answer your question, sir, is if we don't focus on this now, others will have that competitive advantage. And if people don't think that's a big deal, it's those who have the priority and those who have the power in that area will then dictate how the rest of the world should be doing. So we want to continue our amazing standards. If we want to continue, these key values and fabric that we hold in Canada, then we're going to need to have a focus on that Canada first mentality and show the world why it's better in Canada, why it's better in our own backyard, and for Canadians here to focus on why we should support the entire value chain of our industry.
Okay, very interesting. And so a couple other things. Now, you touched on the Mineral Tenure Act, I think, like this idea of consultation. Was that BC Supreme Court decision? Was it resolved? What's the state of that? And is this still an issue? And could you just kind of very briefly, if you can, kind of illuminate people on what the issue is?
Right. So there was a court case. The court case in BC was resolved in 2023. The court said, in order to grant claim staking, the government has to consult with Indigenous people. So moving forward in that way is we've been working very closely with government to ensure that whatever is built actually works for the industry and actually retains capital. So on January 7th, the Ministry of Mines released a draft consultation framework for feedback. AME also provided a briefing note on it and ways that people can provide feedback and get involved in it, which is online as well. Or if you're an AME member, it should be sent to you. And look, we're pleased that the draft incorporates many of our recommendations, including a government-led consultation process with a fixed timeline. In this draft, it has 90 to 120 days, a commitment to deliver clear consultation processes and batching applications for efficiency. Look, significant work remains both on the framework and the act. We're going to keep advocating for reasonable timelines, fairness for all participants, confidentiality of information, transparency of decisions, and adequate funding. The last item maybe I'll flag for you is that court case, it wasn't appealed by the government, but it was appealed by other parties there, and AME is an intervener in that case. We want to always ensure that the industry voice and our members' voice is always part of the conversation, no matter where it is, to highlight the key importance of the industry. So, we'll see what happens in that case as well. But regardless, we have to have a system in by the end of March. That's what the court has mandated. And now we're ensuring it is going to be done in a way that works for industry, but also works with Indigenous nations and government as well.
Okay, excellent. And just a final question, as we kind of hop around here. This article that you did with Henry, it was quite interesting. You also mentioned the potential of AI-driven technologies. And I kind of speculated out loud with a guest recently that I wonder if AI could really, transform exploration from this very expensive endeavor where you kind of put a hole in the ground and kind of hope for the best. I mean, to oversimplify, where maybe it could become a lot cheaper using, kind of AI and these kind of more modern mapping. Like I'm getting more and more queries from, startups that want to be involved in mining, really. And so what are you seeing on that front as far as the exploration industry?
I think the mining and mineral exploration industry has a lot of catch up now to do in how we analyze, assess, and adopt AI, right? AI driven efficiencies could enhance exploration, processing, and predictive maintenance, right? And this gap definitely needs to be mitigated. There is so much historical data that has already been collected to determine geological potentials that AI provides an amazing opportunity to not only reassess data, do new types of analyses and testing, but also, like you noted, is determine where the most efficient ways to explore, to invest, can occur, right? There's some amazing, entrepreneurs and other entities that are already looking at how AI can apply in this field. And that's another thing that many of our members are looking to showcase at Roundup. So we always need to be looking at how can any emerging technologies, both from an AI perspective, from a logistics perspective, from a thought leadership perspective, that we're ensuring that we are cognizant of it, that we adapt in order to maintain and make our industry thrive, but also to ensure that we're not leaping without looking, and we're really looking at it from a practical and pragmatic perspective as well. So I'm excited to see where AI can go in MinEx and mining, and how I think, as you noted, will increase efficiencies on that front.
Okay, excellent. So if people want to go to the conference, simply go to roundup.amebc.ca. Keerit Jutla, President and CEO of the Association for Mineral Exploration, thank you for joining us and sharing your perspective on this week's Northern Miner podcast.
Thank you so much. And we can't just talk only once every year pre-Roundup. We're going to have to chat more often, my friend.
I was just about to say, if you guys have news, let me know. Happy to have you on. You guys are neck deep into the policy and really the functioning of this industry. So by all means, please come back.
Sounds great. Thanks so much.
And indeed, we will have to get Keerit Jutla back on the show to hear the latest on what is happening in British Columbia. It's quite nice to get people with a front row seat on the real issues facing industry and government in this sector. So thank you once again to Keerit Jutla for appearing on this week's podcast. Thank you, dear listener, for continuing to support the podcast. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.